Joining us now is David Vélez, Nubank CEO and founder. Welcome to the show. It's great to have you on. I do want to start with the fact that you've been able to achieve profitability and, according to a number of metrics, outperform peers and traditional banks in Latin America, despite the tough macro environment. How have you been able to do it?
Hi, Morgan. Thanks for having me. Sure. We are surfing what is fundamentally a different wave here in fintech in Latin America. The story that we've been benefiting from, it was a landscape, a market that was very much concentrated by 5 banks about 10 years ago, where there was a significant lack of access. About 250 million people in Latin America did not have any access to banking services. And the banked population was paying some of the highest interest rates and fees in the world. And so we launched about 10 years ago with obsession on the consumer, being fully digitally native, using the advantage of the business model on behalf of the consumer by offering products that had less fees and better consumer experience. And ultimately, that has been a wave that continues accelerating our growth to even today, where we have 80 million customers in Latin America. Almost 50% of the Brazilian adult population is now a customer of Nubank. And with that growth is coming significant profitability over the past 12 months, as we've been able to gain significant operating leverage. We're able to serve those 80 million customers with about 8,000 people, centralized. We don't need any banking branches. We don't need a lot of expensive infrastructure. So we're starting to really see the benefits and the power of full digital banking that ultimately should translate in 20x lower cost to serve than traditional banks.
Yeah, that 46% of the adult Brazilian population is eye-popping. It really got my attention. The fact that you are doing this credit product expansion, and you're in credit cards and payment accounts and personal loans, insurance policies, you've got trading customers as well, but the fact that you're expanding your products, why do you feel confident doing that, despite the fact that we have seen more globally this banking turmoil playing out in real time right now?
Yeah, so our story really is about taking share. We're not necessarily giving credit to people yet that don't have it. We are taking share from 5 banks that had over 85% of the entire market. So while we have 46% of the adult population of the country, we're being able to cherry pick the best type of customers where we have significant story, where we've opened bank accounts and are getting their salaries every day, and ultimately giving them additional more products. So we are surfing a wave that is almost uncorrelated with the market, regardless of whether GDP is growing 3% or 0 or negative 3%. People want to be served better. People want to be paying less fees. People want to have more access. And that is ultimately what has been driving our growth now and through the 10 years. We've been seeing through that decade, and we're turning 10 tomorrow, we've been seeing really adverse macro crisis here in Brazil consistently. So we're almost used to seeing this entire macro scenario. But the benefit of operating in a market like Brazil is that once you launch, you're actually able to launch a product that is 10x better than what traditional competitors are able to offer.
Well, David, hi, it's John Ford. I want to ask you a question about the globally interconnected nature of the financial system. So in what we sometimes refer to as emerging markets in Brazil, the rest of Latin America, how much of a risk is the U.S. debt ceiling negotiation and the volatility it could bring to global financial markets? If we get really close to default, even if we don't here in the U.S., what's the potential impact on Brazil and the rest of LATAM?
Yeah, so U.S. plays a really important role, obviously, the main market globally in financial services. So anything that happens in the U.S. ripples through emerging markets, ripples really around the world. In this specific case, I think we would expect to see more volatility. We've been seeing a lot of volatility over the past 12 months, a lot of that volatility in Brazil coming from the U.S. But in reality, when you actually look at Brazil, specifically at the Brazilian banking sector, it's extremely solid. And it's extremely solid because it has had a regulator that 20 years ago had to deal with this banking crisis and instituted a number of different regulatory reforms that forced a lot of conservativeness in effectively every player in the industry. So we would expect some volatility, but it's not that different from the volatility we've seen over the past few months. And ultimately, people down here are doing their job. Companies are moving forward. We continue to grow. We continue to serve customers, and it would be one more blip in a lot of tumultuous 2023 and 2022.